Coming up in this show, I'm going to bring you my opening comments on the markets. Katie has trade planning with options. She's going to show you how to apply our charting with option strategies looking at EWZ. Arby has stock sectors looking at a few steel stocks. You're going to like that, some trades coming up. And I'm going to bring you stock sectors also. This is kind of a long one, but I thought it was so important. So I'm going to bring you analysis on the MAG 7, and I'm telling you many peaks are in place, and that is a warning for the stock market. And our premium service preview is over. And we promised we were going to offer specials, and they're available here. Actually, for everybody. Take a peek. And I'm going to bring you my analysis of the stock market. We'll look at multiple time frame analysis in SPY. We'll also take a peek at the NASDAQ and the VIX.
Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone riding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market index showed dramatic disparities early last week as tech and AI stocks moved down sharply. They were extremely overdone to the upside, and at the same time money was flowing into the Russell and the mid caps and the Dow as they were all moving up. Wednesday, one of the most dramatic and unusual days we have ever seen regarding any kind of a disparity in the market, a rotational market. While the Russell was up 73, that was huge. What is that, 3.5%? The Dow up 740 points, while the NASDAQ was down 600 and the S&P 500 down over 70. That was a crazy day. What happened was, well, the administration, they came out and said they're going to impose tougher restrictions on trade in semiconductors. That's part of the battle going on with China. So those stocks got sold, but the money was moving into other sectors of the market. Thursday, the selling continued, but all the indexes got in alignment, and they all got sold to the downside. There were some big declines in the Dow, which had that huge gain the day before, finished the day down 535. So all the indexes were down on Thursday. And here we are on Friday with a choppy market, and a market that's having trouble getting its footing as it's waffling back and forth on either side of neutral here early on Friday. So the stock market's been in this giant rotation. Growth and stocks that are in that tech AI category, they went to crazy levels. Now they're getting sold, and the money is moving into small caps, mid caps, value stocks. Well, at least it was till the last couple days of this week. And value is a category that's really well represented in the Dow. I've shown many times the S&P 500 or the Wilshire 5000 and the chart that shows the market cap versus GDP. And for the S&P 500, we got up to levels that were right around 200%. I've shown that a number of times, and I visited that again during the big picture analysis I recently have put out. That all made it seem like the Dow was a better value. But now, of course, the Dow is starting to get sold again off of those highs. Maybe that value premise is not exactly accurate. Let's take a look here as we look at this slide. And this is the Dow market cap to GDP, and it's not cheap. Thank you, Market Trends, for this chart. And you can see that where we've gotten here in 2024 is basically up to the historic levels of market cap to GDP. That's 140% right there, as you can see. Here in the post-war period where all that buying was coming in, it got up here to about 130% or so, and it moved up through the 60s and got back up to that level. And then here in the period where the bear market started to hit in, or the secular bear market that I have recently shown during that period, then those valuations started to really move down as, what were those nifty 50 stocks back over here started to get sold. And that made a big difference in the indexes. Now you can see in here what happened was that peak over here during the dot-com bubble, well, that got up over there to maybe about 115% for the Dow. That's the Dow market cap to GDP. And then you could see what happened here during the Great Experiment and money being pumped in a way that reached levels of insanity and massive government spending going on. Well, then we got up over here at the end of 21, beginning of 22, up to historic levels. That was about 147% of GDP for the Dow valuations. And now you could see we're getting up there again. Now, what that really means is that while there's a lot of value stocks in the Dow, a lot of stocks that really didn't participate that well on the upside, well, they're really catching up right now, or have caught up, and their valuations are not as cheap as it may seem. That probably means that the Dow is not going to be able to make the big gains that it has been making recently, and likely it's going to be coming under pressure and more in alignment with the broad market. So while we expected a correction in the market, and that's going on right now, and we think there's another 1 or 2 weeks to go, at least for now, following that, we think there's going to be an upside attempt, and that's been our analysis all along. A mild pullback right now, though it's not so mild when you look at some of those AI stocks, and then another attempt to the upside. And that's what we think is going to happen. I think they're going to try, but don't be surprised if it's followed by the market not getting that high and then stalling again and moving back to the downside. I don't think these Dow leaders, the ones that have now caught fire and moving to the upside, are going to make much higher levels, and that's because of what I just showed you, valuations. You've got to watch my analysis coming up on the Mag 7, where I'm going to show you that a lot of them have some important peaks in place, and that's going to give the stock market indexes problems, especially the S&P 500 and the NASDAQ. We think that for traders, you're going to have some really good two-sided action coming up here, and you got to pay attention to what indexes are strong and what indexes are weak in any particular day. By the way, our day trader service helps you with that a lot. You can get our cockpit up and see which are the strong and which are the weak indexes. It becomes very clear. For investors, well, put on those selling shoes. There's an opportunity coming. It's not that far ahead. We'll call a summer peak, and then a lot of trouble. For the stocks this week, well, the S&P 500, it looks like it's about 1% to the downside. The NASDAQ about 3% to the downside. The Russell about 2.5% to the upside, and the Dow gains about 1%. But the Dow was up over 3% on the week. Bond market 30s are down about 7/8 of a point as the 10-year yields pop about 5 basis points. I think that's a temporary bounce in yields and a temporary pullback in bond futures, because I think yields sometime in the next few weeks are going to fall to 4%. Gold market, it made an all-time high and then reversed. There's a big shooting star there on the weekly. It loses about $12 in the week here early on Friday. It made a high of 24.88. Kind of had a target for the next few months of 25.25. You could see that in the big picture analysis that I put out on the major markets. Now I think there's a pretty good chance it's going to get under 23.50, maybe 2300, but then there's going to be fireworks. Take a look at my big picture analysis. Silver market and industrial metals were much, much weaker. There's really a departure going on right now between these metals, and that is the industrial metals and investors focusing on a slowdown coming and a potential recession, while the gold market is acting like a currency, as we have a lot of purchases going on by major central banks around the world. And that's why we're getting this departure and change in relative strength. I think later on we're going to see the industrial metals catch up again, but for now, you can see that particular disparity going on. Dollar got a small bounce up about 0.2% on the week, and I think that's going to be headed lower again very soon. And the oil market down $1.40 so far on this week, pulling back from some resistance. That resistance around 84 and then around 88. And I think it's going to go up and test 84 at least again in coming weeks. You want to see all of our analysis on all of these indexes and futures. Watch Future Speak every single Wednesday. Ari does a fabulous job presenting that. And I think that you will love that show. That's for levels 2, 3, and 4. So please do become a member if you are not. Get acquainted with askSlim. Go to that website, askSlim.com. Look around. Make sure that you subscribe. Sign up for free Snapshot Lite, and you're going to get our analysis on the S&P 500 every single day. No cost to you, no credit card necessary. On YouTube, subscribe to the channel, click the notification bell, and do like this video. Give it a thumbs up if you are watching it or any of the clips that we put up there. And follow me at askSlim, well, on X. Matt at askSlim.com is who you contact if you have questions about our education and analysis or any offerings that we have. So you want to contact him, especially if you've never been a member and you want to take advantage of first-time memberships. This is Trade Planning with Options. Katie's going to walk you through EWZ and then take you to the Tracy Trade platform, and she'll show you an option strategies that are fitting for the analysis. She's an expert in combining cycle analysis with option trade.
Hi, this is Katie with askSlim. This is a Trade Planning with Options video on July 18th, 2024. Today I'm going to show an options trade idea in the iShares Brazil ETF, ticker symbol EWZ. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email Matt at askSlim.com. Here we're looking at the weekly chart of EWZ. On the bottom, we have a 31-bar cycle bracket, and you'll notice that EWZ is 4 weeks off that intermediate low. Now, the prior cycle was negatively configured, meaning that it ended lower than where it began. In such cases, the probabilities favor not making a higher cycle high, so we have created this resistance zone using that cycle high and this recent low. Conservatively, we would project EWZ to be able to make it up to the bottom of the resistance zone at 30.24. Let's also talk about the momentum. We show momentum on our weekly charts with the reversal scout. That's this green and purple ribbon. Notice that after each cycle low, the reversal scout turns green. That helps us to confirm the intermediate low, and the reversal scout has recently turned green in this cycle as well. Now let's switch over to the daily chart. Here we have a dominant cycle that is 44 bars in length. It is further divided into 2 minor half cycles. So we're currently in the time period when we would expect the low of this first minor half cycle to form, and then for EWZ to move back to the upside in the rising phase of the second minor half cycle. So EWZ reached the top of the support zone today, but we do not have any indication yet that our minor cycle low has formed. We could get some further decline over the next several trading sessions. The support zone goes from 28.43 on the top to 27.82 on the bottom. We want to see this support zone hold and for EWZ to begin to move back up. Momentum on this chart is currently still positive. Our reversal scout is still green, and the slim ribbon, which colors the candles red, green, or gray, depending on momentum conditions, is also still green. Now we're going to wait for an entry signal, and that could be a momentum continuation signal on the slim ribbon PO down here. We could also use the 2-hour chart and watch for a return to positive momentum here. Notice that the reversal scout on the 2-hour chart is negative, and the slim ribbon went from positive to neutral today. Back over on the daily chart, Once we do get the entry signal, our projection is for a retest of the recent high at about 29.5 to the middle of the resistance zone at 29.80, or perhaps to the top of the resistance zone at about 30.5. The last thing to notice is the daily cycle timing window, which is the time frame here between these blue vertical dashed lines. That period of time is from August 19th to August 27th. We're going to be using the August 16th monthly expiration cycle, which is just before this time period when we expect the dominant and minor cycle trough lows to form. Now we're going to go over to the Tasty Trade platform. They are our preferred options trading platform. If you'd like to learn more about Tasty Trade, you can go to the askSlim homepage, hover over the Marketing Partners tab, and click on Tasty Trade. That will take you to this page where you can learn more about them. And if you choose to open an account with them through our link here, that will help you with a special bonus and also helps us. So please do check that out. Here I have EWZ loaded into the Tasty Trade platform. The IV rank is currently 34.6, which is at the lower end of implied volatilities right now. So this suggests that a long premium trade would be appropriate. Let's open up that August 16th expiration cycle. Before recording this video, I looked at various long premium strategies, including long call, a butterfly, and a zebra. Now, the zebra is the most expensive of the three strategies, but also gives us the best profit potential, so that is what I am going to demonstrate. Now remember that we're waiting for an entry signal, so the strikes might be different at the time the trade idea gets activated. I will post the activation and the strikes on our Discord channel, and the strikes will also be updated in the options trade idea tracker. For now, the way to set up a zebra is to buy two calls that are close to the 70 delta. Right now, that's the 27 strike. So let's buy two of those. Then we look at the extrinsic value. You can find the extrinsic value in those two calls right down here on the Tasty Trade platform. We then sell one call that is closest to that much extrinsic value. It's usually around the 50 delta. Now I have extrinsic value in this column right here on the Tasty Trade platform. I'm going to sell 129 call. So this has the effect of washing out most or all of the extrinsic value that we are purchasing in the long calls. We pay a debit of $3.14 for this, and we pick up over 100 long deltas. If we were to purchase 100 shares of EWZ, it would cost us over $2,800. This costs us $314, and our loss is capped at that amount. We also have unlimited profit potential, just like buying stock. So here's the risk graph where you can see that unlimited profit potential to the upside and the capped loss on the downside. Again, let's wait for an entry signal. If EWZ does get below that support zone, then that would change the hypothesis and it would render the trade idea no longer valid. That's our options trade idea today. I will update the options trade idea tracker with this trade idea, and we'll follow up on it again next week. You can reach out to me on Discord or via email at katie@askSlim.com if you have questions or feedback.
And make sure that you follow her instructions on how to open up a Tasty Trade account through our website. Special deals for you, and it does help us. Ari is going to show you the steel stocks. You're going to like these long side ideas that's coming up.
Stock sectors, steel stocks for July 18th, 2024. This is Arvind Ramachandran. In this video, for Market Week, we will do a mini stock sectors on the steel stocks, highlighting U.S. Steel, Steel Dynamics, and then really a sum of the evidence look at Nucor. And after this video, you should have a really clear understanding of where we believe we are in the intermediate term cycle and the opportunity that we believe is in front of us. So with that, let's go ahead and jump into it, and we will look at U.S. Steel first. That is symbol X. Okay, so this is our weekly cycle analysis here for U.S. Steel, and you can see that we had that large gap up on the takeover offer that then has since filled on the downside, and we are in still what looks like a bearish mode as long as we hold below that key line in the sand, which is the 78.6 at 40.88. Highest probabilities are we would see one more test down here, and we have a low that is due 819 to right around 10.7 here in US Steel. If we go ahead and jump over now to Steel Dynamics, that's symbol STLD, of course, and you will see the look here on STLD. For STLD, I just want to highlight briefly the late stages of these corrective periods and how clear they have been on the downside in each of those cycles. You can see the clear sell-off into the trough right there, and right there. And where are we right now? We are in a period that looks a lot like this period back here, back in the later part of 2022, where we saw that rally that then got one final hit down. We're seeing this rally, which does look a bit early. We'll be watching for one more move down here in STLD, and that would only be valid as long as we're holding below that key line in the sand, being the 78.6 fib at 143.86. We'd be watching for one more move down into this trough, which is due 729 to 1014 or so here in STLD. So with what we just saw in both US Steel and now Steel Dynamics, let's take a sum of the evidence look at Nucor, that symbol NUE. We have overlaid both the STLD cycle bracket in blue and the US Steel cycle bracket in green. And what I've done here is I've highlighted in gray these nesting periods, which Slim has done for years, which is a great visualization of those periods of risk when you have multiple cycles due to bottom around that same timing. In this case, this is multiple stocks that are due to bottom within the group around the same time. This topic was covered in great detail in Slim's cycle analysis workshop, which again, if you don't know, is available on the askSlim.com website. You can go to workshops and then click on cycle analysis workshop to see all of the topics that are covered. Slim took his 50 years of trading and of honing a process and then condensed it down to 15 hours of learning. It is really a fantastic way to learn the core fundamentals of our process, and then you can use our videos more as an application-based learning, right? So that is really what the goal is to first understand the fundamentals, understand the core concepts, and then you can apply that learning in all of our videos, okay? So that's our look there at the workshop. For Nucor, again, we're in that period where we have multiple cycles due to bottom. There's a trough that is due here, 729 to right around 10.7. We'll be looking at this like a bear flag, just like this period back here. You can see we had that rally and then one final sell. We had a rally, one final sell. We had a rally, one final sell. We're having a rally. What's the highest probabilities? Based on everything we have seen here in both STLD, X, and now Nucor, highest probabilities are we would look for one more hit down here into that trough. There is a 78.6 at 145.59, and that is valid here as long as we're holding below the 61.8 fib at 182.31. Critical for us to hold below that 61.8 fib. If we move through it at this phase of the cycle, it would raise the odds that you have formed an early low. Right now, highest probabilities are that we would see one more move on the downside to form a clear trough. Keep in mind that the trough here in both Nucor, STLD, and X are all due right around the later part of summer time frame. So we would look for a bottom to form right around that time period and then see a solid pop back to the upside. Okay, so that is our look at the mini stock sectors here for Market Week. If you have any questions or comments, feel free to post them in the comments section on YouTube. Thanks again, and hope you guys have a good day.
This is a look at the Mag 7. And this is kind of a long segment. I usually don't put these out this long in the Market Week show. But our premium services preview ends this weekend. And this is the kind of stuff that's in our member videos. So I wanted you to get a taste for that. So I'm putting this in the Market Week show. And you're going to get a great idea about our analytical style and some important things coming up for the stock market and why these are giving warnings. This is stock sectors. We're going to look at the Mag 7 plus SMH. I think this is important because there are some warnings here on these stocks. And that, of course, would be warnings for the S&P 500 and the NASDAQ. Now, this may not mean that there is a major stock market top already in place because we see a very big rotation going on. What it does mean is that the S&P 500 and NASDAQ will have periods going forward where they underperform, and the market may be led by not these growth stocks, but more in the value or low caps or mid cap stocks. And we've seen that going on, but I wanted to show you this because these stocks, many of them, really look like they are done for as far as these giant crazy moves they've had on the upside. So let's take a look at these stocks, and I think you're going to see what I mean. Some of them are still okay, and I'll show you those. All right, so we're going to start out by looking at Apple. Now, we have weekly on the left, daily on the right. Of course, we're doing multiple time frame cycle analysis, and we're looking at support, resistances. There are some important breakdowns in some of these stocks. Apple doesn't really have that. What Apple has right now is just simply warnings right over here regarding this big engulfing pattern on the weekly that comes at the top of that fib extension. Well, that is a warning that the top is in place in Apple. And you can see in here this formation where there was this island top right there, those two bars that a gap up and a gap down. And that is another warning of a top in Apple. Now, we have this projected down, either getting down to the supports here around this is 222, this is 218, and that would be in the next week and a half or 2 weeks, or potentially getting down to this cycle low support right over here, which is 206. This would be really bad if that happened. This is one of the more positive of the stocks in this group because, well, you could see in here the momentum is still positive. When you look, this is still green, and you can see that the slim ribbon right over here is still pointing upwards, and this can be support for Apple. So Apple is going to be one of the more less negative stocks in this category that I think you're going to see here. So let's go through these really quickly. I'm going to keep this weekly and daily up as a side-by-side, and you can see on the bottom is the cycle brackets in both of them, giving you an idea of the cycle rhythms, the money flows in the market, and then the slim ribbon PO on the bottom, the slim ribbon right over here, and the reversal scout that you can see right here. Reversal scout turned positive right over here in Apple, which was a fantastic signal. This rising phase was giant on the upside as it moved from 165 up to 237. So that was all positive. And Apple is looking less negative than most of what I'm going to show you in here. Microsoft, the next one. This is a different picture in here, and I'll show you why the picture is different. That's because you have the breakdown over here on the daily cycle. So you can see the cycles in here and the rhythms in there, and this where that cycle low was, very bullish formations that you had right here, but then the bullish formations ended. And what that means is that when it breaks this cycle low support, it's got this much time still to fall in Microsoft. It's very reasonable to project it over here to 427. That's about 13 points down from where it is right now. Again, in this next week and a half to 2 weeks, we're going to be looking at the synchronicity and the timing that we have in here as these harmonics are lining up, of course, in this tech AI category. And then because this is a negative cycle, we would expect it to be followed by another negative cycle. So this cycle rebound right in here gives you a sell pending area. We don't have the anchor point yet, so we don't really have the sell zones. So that's why I listed in there, and that's why I believe that you'll get a rally in here that will fail, and that lines up with this space right over here on the weekly, and then both of them moving down again. So this is an example of one of those very important AI stocks that has a heavyweight in the indexes that is now turning negative. And very likely this formation here warns that this is an important peak on the weekly chart. Let's look at Google, G-O-O-G-L, and we'll see right over here as we look at this, you have a similar occurrence. Now you have this potential weekly flag forming in here, and you can see this intermediate low expected over here on this minor cycle right there. So the minor cycle there lines up with these cycles here. So that says that this flag likely will extend down. Support here is at 170. Support over here is around 171, 172. So that's what we would expect over this next. This looks like about 2 weeks or a little bit longer. But again, you have this breakdown here. The cycle is pointing to the downside. And it does say that if we get rallies in here, they are likely to fail. So that's a look at the third one, Google. Here's the next one, Amazon. Amazon, of course, much more in the retail category, in my opinion, than it is in the tech stocks, but it is listed in this Mag 7 category. That's, of course, because they have AWS, Amazon Web Services, which is a huge part of their business. Again, a breakdown right over here. You could see the cycle rhythms right there. Remember, these are cycle brackets. These are not an indicator. This is not anything but a guide for us to do this work in here so that we understand the rhythms or in the market. And you can see in here, this cycle bottomed here. This one, well, it's still in the middle of the cycle. This has, again, a couple of weeks to go. And then, again, because of this negative formation in here, the structure says that the next rally will come up and fail. Once we have an anchor point in here, we'll be putting in those resistance zones, and that's why we have it listed as sell pending right now. You can see in here, as it's turned over, it's gotten into support, and the support right over here is around 179, and here are 174. So if that were to happen and get down and test this low, that, of course, would be even more negative. But this is a negative pattern. You can see in here, upward momentum has been lost. It's now at neutral right over there. As far as the daily chart goes, this still has not turned over on Amazon and the weekly momentum. So that has some work to do to really turn negative. But the daily has turned negative. I didn't mention momentum in all of these stocks, but it's important as you do your analysis to look at that. I hope that you have the ability to use our momentum indicators because I think they are so good. So this is another important one. Here you could see this evening star formation right over there in NVIDIA. Of course, this has been the darling, the market leader, split 10 for 1. Incredible. This right over here you could see is an engulfing pattern. I'm just going to grab that right there so you can see that engulfing pattern here, which made the cycle peak. But it only had a couple of days to fall, as you can see, and then got into another rally. But it could not make that peak and then turned down and broke the cycle low support. What that says to me is that this is likely an important peak in the stock in NVIDIA. We're going to look at prices over here, support right there at about 108 on the weekly chart. So this actually is pointing down to a short-term extension right over here. But I'm just going to duplicate this so you get an idea that we're really going to target about 108 right over there. Let me just make this red so you get the idea of that's what it looks like coming right down over there. That's that weekly support level. We'll just grab this and put that right there so you can see that's where that weekly support is. And it's likely to get down in that area below the 110 number. Of course, it's way below where it was when it split. Again, negative shape here says that the next rally will likely fail in a resistance area, and then after that turn down again. That will all occur all right over here in this zone that we see right over there, which is that fib extension zone, where it is likely to continue to fail from. So that's a look at NVIDIA. Let's take a look at Meta. Now, Meta has been the one stock that I have really believed has been just ridiculous, hugely excessive on the upside. You can see here on the weekly chart, it has this engulfing pattern. It makes this double top and then turns down over here. This was a huge decline from 542 here down to as low as 458. So that was like 15% drop or so right there. Again, you can see in here, look at these cycle rhythms, and this points to about a week and a half on the downside still. This is your cycle low support right over there from that cycle, but this one did break down. And again, you have a negatively configured cycle here, a peak set in here, and that says that once the low is made in here somewhere, we're going to guess at 454 right there, but there's another support here at 442 that you can see right there, and those are levels that I think are important. So I'm just going to grab this right over here, put in the 442 number right over there, and you can see that's kind of where it could get down to there. Bounce, give you a good selling opportunity, and then continue on the downside as you see right over here. This momentum is turning over right there, and this momentum has turned negative in Meta. I think any rally that you get here in Meta is likely to fail. It will be a fake. I think the whole concept of Meta being wholly redeveloped to give you these great AI experience, and it was going to be able to be monetized. I think that's all a big farce, and I think we're going to see Meta have a hard time, a long time looking forward. Tesla, of course, in the tech category, because they're really a tech stock, even though they make cars. And this is very interesting. And you can see in here that you get this big, long-legged doji right over there, and a harami cross is what they call that. That really says that there's a top area right in here when you look at that. But still momentum strong, very small downward turn compared to the rest of them. And look at here at the cycle patterns. Now there's an out-of-phase cycle right over here due to bottom in the next week, and then likely to turn up again. And you can see this diamond consolidation. That says to me that there's a strong likelihood that what we're going to see is a test of the high right over here before this one turns down. So let's just put this in right across here. So it probably gets back up to that 270 level in there after this diamond is finished forming. It might not, it might get down over here to 231 before it takes off on the upside. But this consolidation right over here really, when you get these diamond shapes, it really says there's another likelihood that it's going to try for that high again. So you can see Tesla not as negative. And with the news that came out regarding their deliveries, you would think it would be worse, but it's not. It's really giving a pretty good sign. You can see in here these signals over here of momentum being resumed to the upside. You're about to get another one right over there. So strong momentum still in Tesla, a bullish diamond configuration right in here, and this one still looking like it's got upside. Now we're just going to add to this and look at SMH. Because the semiconductors are so important to this analysis, we're going to take a look here at the SMH. So you can see what's going on in here. You have a evening star formation that is very likely to complete here on the weekly. And you have a breakdown here on the daily. This is very much in alignment with a 1.5 to 2 weeks still on the downside. And because of these peaks that are forming right in here, it says to me that this right over here is a peaking area, and this right over here is a negatively configured cycle right here pointing to the downside, very likely to get below that low right over there, which was 250, and probably getting down over here to 241. That is support from the weekly right over there. You can see it lines up with this low right over here at 241, and potentially getting even deeper than that out over here into Q3 to about 231. So what this says is that momentum has been lost on the upside. You could see the slim ribbon turning over, the slim ribbon PO, which was positive throughout here, now giving you this signal of it being neutral, but not yet turning over here. So we have the peaking process going on right now. We'll look for another week or week and a half of upside attempts that fail, and then over here a much better selling opportunity in SMH. That is a look of this stock sectors. I think it was very important to bring this because it gives you, number one, a great look at the analytical style that we bring, how we do multiple time frame analysis, how we bring in cycle analysis, which shows you the importance of structures, and the meaning of those structures and what it means going forward. And that's how we do our projecting, using that information to give us what we consider to be the sum of the analysis. And the sum of the analysis for most of these is negative, And that's a warning for the S&P 500 and the NASDAQ. And again, I will say it. It doesn't necessarily mean an important top yet in the stock market, because there is a potential for the rotation to continue. And then once this corrective phase is over that we anticipated, then the market getting up and testing those highs it recently made, or maybe taking them out by a little bit. So I wanted to bring you what I thought was important analysis, and I hope you thought it was great. Let us know. This is my stock market analysis coming up with projections on the S&P 500. But first, this important information. Please do read this slide. It tells about our approach to analyzing the market and about you using the information and the importance of owning your own trades. All right, our premium services preview is ending this weekend. We had hundreds and hundreds of people take advantage of this, seeing tons of our stuff at no cost. And now we're offering specials for them to become a member, a premium member. And you can actually, if you didn't sign up for the premium services preview, or if you did, of course, and you want to take advantage of these specials, go to askSlim.com, go to the top of the website, and click Join Upgrade Now. That's going to take you to a page that shows you the specials, and it gives you a great opportunity to really learn the analytical style that we have. Our whole analytical team uses that. You've seen the great results from that, and also how you can begin to adopt this into your own trading and investing. So askSlim.com, top of the page, join Upgrade Now, and you'll get the information about these specials. This weekend only, then it's all going to be over. Stock market, S&P 500, cycle analysis and projections with our proprietary level 4 studies. We're going to take a look here at the stock market. And I think that you're going to find this analysis fascinating. I'm going to show you the SPY in this case, looking at weekly, daily, and momentum conditions, and show you how I've come to the analysis that I did, that I thought we would have a minor correction, and then another move to the upside in the stock market. But also, we've been talking about this time period as the time when implied volatilities would begin to move up. And we're seeing that happening in the VIX also. And we talked about rotationary period. And you can see that's going on also as the SPY and NASDAQ have been falling while we've had strength in the Dow and the Russell and the mid caps. And that's all been part of a very big rotation. And we work so hard to do that analysis and then bring that to you so you have the best potential understanding for the market that you could possibly have. Let's take a look here at SPY. And you can see this is a weekly chart with our cycle analysis. If you are brand new, what you're looking at on the bottom are cycle brackets. That is a tool, a drawing tool, that gives us an idea of the repeating rhythms in the market. And you can see how stark that is when you look at the ideal rhythms in here and at the actual cycles as they formed here on the price chart right over here. So in other words, this was a rising phase, a peaking phase, a declining phase, a bottoming phase, a rising phase. You can see how that all worked out. And the shape of the cycle gives you a ton of information. As you have a correction right in here that finished in the support zone about halfway down from this, and this cycle was configured positively. It says the next cycle has a high percentage probability of taking out that high, which it easily did. The next cycle was the same, a high probability of taking out that high after the correction, and you can see that it did. Now we are in a period of the mid-cycle correction right over here. So this is a dominant cycle, and this is the minor cycle in this harmonic family. These lines right over here that you see right there are where the actual lows occurred, those troughs, and they don't exactly have to happen on the ideal trough area. In fact, they come like 3 bars either side of that, and that's these blue vertical lines in here telling you, well, we believe there's going to be a decline and a potential bottom in here, and then this rising phase right over here. So if you watch the beginning of the show, my opening comments, I talked about the fact that more money is moving out of the S&P 500 and the NASDAQ into the Dow and mid caps and value stocks. But this is likely to be more of a complex top. Why is that? Because, well, this rally right over here was long. And it said that there's only a few weeks to come down. And we talked about maybe a 3% decline in here. It could be as much as 5% if it got sold real hard over the next couple of weeks. But then we think it's going to go up and try for these highs again. That's the highest probability. You could see the minor cycles in here in these very bullish cycles only gave you modest declines right here. As you could see, that was the biggest one. Not much of one here, not much of one here, and probably not much of one right in here, even though we see some indexes and AI stocks getting sold very hard. Excuse me. The likelihood is that there is not a lot of time, and I'll show you that on the daily chart and then coming up. But because we believe that valuations are beyond what makes any sense, and I showed that for the Dow also in the beginning of the show. If you did not watch my opening comments, go back and watch those. So many people scroll forward or only look at this segment on YouTube and miss all of my opening comments. Well, you will have missed a ton, and you will have missed my analysis on the Magnificent Seven. So go back and watch the whole show if you decided to scroll forward. So this rally in here, I don't think is going to get far. These are your resistance levels right here. This is the weekly 61.8, weekly 78.6 on the extensions. These are the monthly ones. So if the stock market got crazy and valuations got up to 205 or 206%, then you'd get up over here to about 585. I give that a very low probability. I think it's likely this sell-off is going to continue. We'll get a rally up here. We'll tickle out the highs over here or just miss them and then turn over again. And this period over here is a period of a lot of risk. Remember, Election Day, November 5th. And somewhere in here, in maybe end of August through sometime in late October, early November, you're going to get into one of these periods where you could get some very hard selling. Now, there's an alignment with the monthly analysis coming up here. And again, watch my big picture analysis, and you'll be able to see that. And that says to me that this decline over here out into this October, potentially November period could be very sharp. And you could see potential large drop in Q3, Q4 of this year. That's why I think that in the beginning I made comments that, traders are going to have a lot of opportunity in here, but investors should be getting on their selling shoes for this next rally over here, because that could be a good opportunity to make some important exits. Momentum still strong. This is our reversal scout. That's a level 4 indicator. See that? That's where it turned up right there. It gave you that important signal. That's it was bullish. Then this cycle was now moving up. It did the same thing right over here, where it and it does lag by a couple of weeks usually, where it gave you that signal and then came up. Now we're not getting it rolling over yet on the SPY, SPX. So we're still in a period of strong intermediate momentum, and that's part of why I think that this is only going to be a modest pullback that we're having right over here. Now, if I switch over to the daily chart, and this is the daily chart, and we do this one a little bit different, you can see still the cycle analysis in there, which is absolutely fabulous. By the way, you want to learn about cycle analysis, go to the askSlim website, to the cycle analysis page, workshop page, and you'll be able to watch a video there. It talks all about our workshop and how you can learn cycle analysis. So what we have in here is the actual cycles as they formed. And then what I do is I create what's called a slim cloud based on the shape of the cycle, which had projected to the upside, and the resistance levels in here. Now we're getting down here below the 61.8 on the SPY. And that then gives me a warning that because there's still 2 weeks potential declines in here, that, well, if it tries to rally in here, it's not going to last, and it's likely to go down again. Well, if it gets under this level here, the 78.6, that is at about 547 approximately, then that's going to give you another warning of weakness. And if you do that, well, if you get under 542.52, that's where this cycle low is. That's going to confirm the peak is made. And you're likely to be seeing the momentum turning down. Now here is the option bias study. This tells you how to keep your positions biased in a particular symbol, and you can see it's here at the P3, the positive 3 level. Here it is right over here, P3. You can't quite see that. Let's see, there's the 3 coming up right there. And when you're in that condition, it says keep your option positions biased long. That is likely to change soon. I think that'll probably turn yellow in the next couple days, and then it'll be in a neutral condition. So we're waiting to see how this shapes up. If we get a bounce right in here of some significance, then we'll be looking for it to stay in this corrective period right over here and in that channel there. If it breaks these channels, then you can see our projections on these channels here, how far we're going to think it goes. I'm going to switch this over for 1 minute to the NASDAQ. Make a mental picture of this as you're looking at it, and you can see the shape. Now, if you look at the NASDAQ already tested that important support. That says the NASDAQ peak on the weekly chart is made. We broke through this warning level right there. We've come down here and tested that cycle low right there, 1957.54. That warns that the NASDAQ has made its intermediate peak. You'll also see right in here that this is still bullish, but I think it's about to lose it. And the slim ribbon right over here has now had a crossover. So when you look at that, for those of you that are members, take a look at looking at the momentum indicators, and here you can see it turning over right there on the reversal scout, and that's telling you that the momentum conditions are changing to the negative. I'm going to move over right over here now to the SPY, and you can see the SPY is still positive on momentum conditions, and this is a level 4 indicator, the slim ribbon PO, and it tells you when there's likely to be upside resumptions in momentum. It's having trouble ticking up right now, as it is starting to look to us like it's going to lose that positive condition. But if I switch over to the NASDAQ right over here, you can see the NASDAQ has turned neutral as the NASDAQ has begun to lose its upside momentum. So you can see in here again, NASDAQ having that breakdown right over there, while the S&P 500 SPX, come on up there, is still giving more of a positive look. So the SPX stronger than the NASDAQ. That's because of how the weightings are, and we still have these the positive conditions right over here in the option bias indicator. So weakening going on significantly in the NASDAQ, and at the same time the S&P 500 is at an important level right over here. And as you can see, we have not put in the lower tracks yet because it's still holding up. If it breaks this area 54.91, which is the warning level, that is then going to tell me that I need to put in the downside projections in here. And again, this trough aligns with that weekly trough that we talked about, and that is likely to give us a picture of lower targets on the downside, which we should be seeing happen as the market continues to move down. So again, here's that weekly looking like a couple of weeks to the downside. That support right there at 537, the support over here at 529.50. Those are reasonable targets on the downside before we get one more move to the upside. Here is that cycle right over here calling for that decline into mid-August. And then after that, we'll have another cycle in here that I think is going to fail and then give us quite a negative cycle following that. So that is a look at the S&P 500. This is a look at what those charts look like. Let me just change this back to SPY right over here. And you can see here, looking at the intraday, this one right over here, that has turned negative. If you use our market condition indicator, and if you're a level 4 member and are getting our alerts on these things, then you'll be able to really tell when things are changing. So this is a look at the SPY. Let me get right over here and look at SPY again. And this is all of them right over here. The weekly right here, really interesting the way this lays out. The daily right over here, And let me make this a little closer so you can see. Weekly in this corrective period, daily in this declining period right over here. The look at the positive conditions still in momentum that look like they're just about to turn over, and the first domino falling with negative momentum on the 2-hour chart right over there. So I want to bring in the VIX because this is so important. We had talked about the VIX giving you a look at what should be a pop in implied volatilities coming up. And what we looked at was that these cycles right in here, let me look at that there was a cycle low here. Ignore that line there. This is today. That you can see there's a bad tick in the chart right there. They'll correct that. Now, we thought that we were going to be rising here and there'd be a pop. Look at the perfect cycle right in here. And then where we got this pop. This cycle aligns with the S&P 500 weekly and monthly troughs. And I said we could see a large pop in IVs. Well, we're getting that, as you can see, as it moved up here to 16. This cycle right in here over this next couple of weeks, and you can see where it's pointing to, well, it could get, it could stop here, at the 16, 17 level, or it could get much higher right in here. So the next 2 weeks are a time frame when implied volatility should go up. This was targeted by our analysis, and it really turned out to be quite perfect. So that's a look at the VIX, and that is my analysis on the S&P 500. Summing it up, well, we have this weakness going on in the tech stocks, AI stocks. They're putting pressure on the NASDAQ, and the NASDAQ is now giving a warning of an important peak. Go back and watch my analysis on the MAG 7. You will see where that's coming from, as a bunch of those have had breakdowns. And the Dow is likely, and the Russell, to continue to get bids in a rotation, but valuations are such that there's probably not much more to go on the upside. And watch out for a big failure that comes sometime in the August-September period, with a decline potentially out into late October or even into November, around the time of the election. That is my analysis on the stock market. Remember, you can learn about us by going to the website, askSlim.com, get acquainted with that, and sign up for Snapshot Lite. That's free, and you're going to get our free S&P analysis every single day. And if you're here on YouTube, click the like button, click the thumbs up, and like this video, subscribe to our channel for sure, and watch all our member videos in the past shows and in the playlist. On X, follow us at askSlim. And any questions you have, write Matt at askSlim.com. That's it. I want you to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.